Hey, what's happening? What's going on, everybody? Welcome to this YouTube channel where we talk about day trading. My name is Matt. This is episode 3 of the free trading course here on YouTube. In this episode, we're going to be talking about risk management, what it means, how to do it, and why you have to do it. It's super important. So let's go ahead and dive into risk management. Risk management is a broad term that basically means how do I avoid losing as much money as possible, right? So with trading, the main super important concept to remember with trading is to live to trade another day. The market will always be moving Monday through Friday, right? Nothing is going to happen that is going to make the markets just stop. If it does, that's crazy and we'll have some bigger problems to handle, right? So the market's always going to be moving Monday through Friday. You're always guaranteed moves. So the number one thing to remember is don't cause yourself to have to stop trading forever, right? You don't want to blow up your account. You don't want to lose all your money in your account in one day or even in a week, because then you're done trading, right? You've failed out essentially. So one way that I do this is to have max position sizes, meaning I have a set number of contracts that I'm willing to take and I cannot go above that, right? So if I have 5 contracts open on the Nasdaq and that's my limit, I'm not gonna put 6 in because then my risk is too high, right? I could potentially lose too much money too quickly. Another thing that I do for risk management is I do 3 strikes, you're out. So 3 losing trades in a row and I'm done for the day. No matter the amount of money I've lost or made, if I have 3 strikes in a row, I'm out. Part of that is because from a trading psychology perspective, you start playing like you have to do catch up essentially. Like, oh, I've lost 3 trades. I have to make this next one work. And when you're in that mentality, it just goes downhill so quickly. The third rule for risk management is have a daily loss limit. So one thing that Top Step does, and Top Step is a program that allows you to pass a combine and trade their money. They have a thing called the daily loss limit, and this should be implemented for everybody. But that idea is that I have like $3,000. I'm not gonna risk any more than $3,000 on the day. If I do, I'm totally done. This could and should differ for every single person who is trading based on your account size. Unfortunately, there's no math really that makes sense that I can just tell you to do. It's based on your own preference and what you're comfortable with. But if you're just now starting out, make sure it is small. So maybe if you're trading a micro contract, it's if I lose $100, I'm done for the day. I'm not trading anymore. And again, this comes back to the idea of playing catch up. What I don't need to do is if I'm down $3,000, go all in on this next trade so that I make all that $3,000 back, when the matter of the fact is, unfortunately, it probably won't go my way and I'll lose all my money, right? So quickly, we're going to recap those 3 rules. Number 1, max position size. You have to have a cap. Number 2, 3 strikes, you're out. Once you hit it, you're done trading. And number 3, you have to have your daily loss limit. Again, if you hit it, you're done for the day. As we progress throughout this course, what we're going to be doing is diving more into the actual charts and the technical analysis, how we decide when to buy and when to sell so that we can make that money using a lot of different strategies. So we're gonna be diving into that. If that's something that interests you, make sure you subscribe so that you can come back and watch those videos. And go ahead and like this video if you're super pumped about the free trading course coming out. So I will see you in the next one. Have a great rest of your day. Peace.